So cash value line of credit programs. So you can see over here, I put, here's the pros of policy loans. I just crossed them out because we're not talking about that. We're talking about cash value line of credit, but I'm putting the cons of cash value line of credit right next to these pros because there's some correlation. Well, it's not as simple as easy. If you start a policy loan, you have a built-in policy loan, there's no application. With a cash value line of credit, you do need to apply. Now I put apply via DocuSign and I put it one time. At least a good chunk of their process is tied to DocuSign, which I'm sure everybody here has used it before. So yes, there's some initial friction, let's just say, to setting this up, but once you do it, it's done. And your guys' renewal, Brenda and Christian, how many years before?
There's no maturity. It's an evergreen line.
It's an evergreen line. And a lot of other vendors, you're talking 2-year term, 4-year term, maybe 7-year term, versus this is evergreen. As long as you're in good standing, you don't have to jump through these hoops, which is nice. Totally private over here, a policy loan is totally private. This is almost, it's not totally private, so I put it as a con, but there is an inquiry on your credit report. So Bancorp will do an inquiry to see if you are credit worthy. But after that, you guys don't report the balance on a credit report, correct?
Correct.
And that's because this is considered what?
Cash secured. So it's cash secured, and the banks can make that determination whether they want to report or not. And our bank has decided not to report these.
Which is great. I will tell you, I did buy a house during COVID, and I had to do source of funds, and I said a lot of my down payment's going to come from life insurance. And what's interesting is they were okay with me surrendering cash value, even doing a policy loan. But when I told them this was with an old line that I was borrowing against this line that I had, they had all kinds of heartburn about it. And they wanted me to amortize those payments. And even though I qualified for the house I bought several times over, I was like, this is dumb. Out of general principle, I shouldn't have to do this. And if I had been with Bancorp, it wouldn't have showed up that I even had this balance out there. So that was very nice. And totally flexible, unlike other vendors where you are required to pay interest only, which is a small price to pay. If you're talking about 3% on the value of your loan broken up monthly, we're not talking about a huge number, but let's face it, sometimes you don't want to do it. And that is an advantage to a policy loan. Well, with Bancorp, you guys actually allow clients to opt out of paying interest only. You fill out a form, and then you're allowed to capitalize or accrue interest on your loan monthly, up as long as they don't supersede the 95% loan to value. Is that correct?
Yes, that's absolutely correct. So they can have that. It's still added monthly, the simple interest. So each month, instead of them having to pay it, we just add it to the outstanding balance. As long as it's under that cap of the line of credit limit, we're good with that.
So that's an option where I didn't do it. I signed up for auto draft. This is nice too. You can sign up for auto draft of interest only. And I signed up for that. So money comes out to pay the interest. So I keep my loan flat. So I'm paying interest essentially on simple interest on a flat balance. So I can earn increasing interest in a tax sheltered environment on an increasing balance. I opted to pay that, but there's a simple form I can fill out if I want to opt out of that at any time, and I can opt in and out as much as I like, correct?
Yep, it's super flexible. We have people that change around. They may have, for some specific reason, want to capitalize for a period of time, and then they decide they want to pay it. And just because they're capitalizing doesn't mean that they can't make a payment. You can always, it's so flexible to transfer back and forth. If they want to pay quarterly or annually, or they don't want to pay at all, it's up to them.
All right, so cash value line of credit programs. Here's the pros of cash value line of credit loans, and we're going to do it in line with the cons of policy loans. Why? Because it correlates. So we talked about one of the cons of policy loans is it's a pain for multiple policies. I now have one, and I did before, I have one portal for all policies. The difference is with the other vendor, all I had was a single checkbook, almost like you'd have with a HELOC, a home equity line of credit. You just have a checkbook and that adds to your balance. Well, now I have a checkbook and I have this online portal where I can do ACH, where I just link my checking account, or I can link multiple checking accounts, or I have a free wire. May affect dividend and tax. Remember, we talked about this. This is an arm's length outside loan. So even if you have a direct recognition carrier that tends to pay higher direct recognition dividends than the best non-direct recognition carriers, it doesn't matter when you're not borrowing against the policy itself. Since this is an arm's length outside loan, it's not like Bancorp tattles and says, hey, they're borrowing against their policy, you better squash their dividend. It's not going to happen. It's an arm's length outside loan. Same thing with taxation. Now, again, the rules are the rules with taxation, but there is a level of separation, which I think makes it easier to bolster the deductibility argument for borrowing against Bancorp's line of credit. One is you're paying a bank actual interest, whether you're paying it or you're accruing it, it's happening with the bank and not the policy itself. Secondly, I have some clients that like to use the free wire rather than ACH to their own checkbook, even if it's the same amount for an investment they're going to make in real estate or a loan they're going to make to their own business or whatever that looks like. They'd rather just do a free wire to show an exact paper trail from the bank to whatever investment they're making. And then that way, again, it bolsters the deductibility of interest. And so even if an IRS auditor knew of all this circular reasoning inside the IRS, that extra layer of separation of paying a bank interest, I think bolsters your case for this being deductibility. Obviously, you're going to have to check with your tax advisor, and that's going to be the final word, and the final word will obviously be the IRS. But I don't think it'll ever even get into any kind of snoop fest by having this extra layer of separation. And last, and most importantly, we talked about expensive money. You know, just walking in off the street, if you qualify for this loan, we're talking about 3% versus a 5% loan. Even if you have the best direct or non-direct recognition carrier and it's 5% through the carrier, why would you ever pay 5 when you can pay 3? Plus have that extra layer of separation, plus have the convenience, point and click convenience, which, let's face it, we're all getting accustomed to that and spoiled by it. And I like how Bancorp has raised the bar, and hopefully the other vendors will follow suit. But that's—
Hey, Hutch, can I?
Yeah.
Sorry, I was going to say, could I chime in on your first, the paying for multiple policies? And you might be talking about features later, and I don't want to jump the gun, but with the multiple policies, you know, one of the features to our line of credit is you can take multiple policies and from different carriers and have one single line of credit supported by all of those different policies. So I don't know if you were going to touch on that, but that kind of fit into that.
Yeah, no,
also.
I'm glad you brought that up. I don't think I was super clear. Yes, I mentioned earlier on that I have 9 different whole life policies from 3 different carriers. And as long as they're on the approved list and they're the highest, they're the highest quality carriers, they're going to be approved by Bancorp. So yes, you can have that diversification by carrier. You can have the diversification by body and having policies on all family members. So yes, having one single line aggregated for all policies from different carriers on different bodies is obviously a huge benefit for convenience, right? It's getting all that set up. Try taking a loan. Let's say I needed a max loan against all my policies, which you'll see in a little bit, the amount of leverage I have. To go and do that essentially 9 different times, even if I'm only calling 3 companies, I have to list out how much I want from 9 policies. It's a huge pain. So Christian brings up a great point. You know, you don't have to concentrate to one carrier to make this work. You can diversify, and a lot of my biggest clients like to diversify amongst all the big mutuals to make sure that they have a nice horse race, because even though we were all showing illustrations, nobody knows what's going to happen in the future. So that's a great point, Christian. Was there something else?
I'm going to add one to your second point there. Is you mentioned about clients and the deductibility, and they do have to talk to their CPA, but we've got clients who have chosen, instead of one line, we've set up multiple lines. So we might have 2 policies under one line, a policy under another line, because they're using one strictly for investment purposes that they've cleared with their CPA, and the other one's for personal use.
That's
So, and
great.
we're able to provide that pretty easily.
That's awesome. And that's a great feature. Obviously, you have to apply twice, but the application, the underwriting is all going to happen concurrently. But then if you really wanted to separate that and be ironclad and use one as your own kind of personal family expense piggy bank and use one as your investment / business lending company or lending bank, you could absolutely do that. I think that's a great idea. So here's some resources for you guys. You can, if you want to learn more about this hybrid banking concept using these outside lines of credits to really maximize that spread, you can go to bankingtruths.com/hybrid. It's a free course for you to sign up for. Now, we didn't really even talk about 7702, but all whole life is getting worse here pretty soon. You have till the end of the year to get into these old policies. So if you have an existing policy, even if you had to borrow against it temporarily to start a new one, this is an option to get into the older, stronger guarantees. I wanted to show you that, but there is a new updated video that I just updated last week at bankingtruths.com/7702, and you can see a very, very detailed comparison that I did with not new and old whole life and new and old IUL. If you want to see your own numbers, you can go to bankingtruths.com/schedule to look at one of these policies. And if you already have policies, you don't need any more, you don't want any more, but you want more info here, you can go to bankingtruths.com/Brenda. It's got her phone number, it's got her email, and it's also got a direct link to go ahead and apply for a cash value line of credit.